Over to you, Paresh sir.
Hello and welcome everyone to season 2 of the CASI New York Knowledge Series. Season 1, we had a lot of amazing speakers. We had bureaucrats, CEOs, CXOs, sustainability, CSR. The core theme was sustainability and CSR with a little bit of volunteering and related activities. This is season 2. This is the second seminar of season 2, and again, we have exciting speakers. Today, the session is on Pitchbook, finance, startup, a mixed kind of a batch. And we have three amazing speakers. One is Hayden sir. He manages a stock exchange, so he has the background of a listed entities. Then we have Hitesh from Magic Break. So he is a part of the internet money. And third, we have Ankur. So Ankur is a part of a fund, but he manages the debt side. So we have three very different speakers from very different backgrounds. And once again, I'll welcome you all to the session of CASI New York Knowledge Series. The entire idea is to get executable advice for all our students. With that background, I welcome Hayden. Hayden, sir, over to you for a few words, please.
Thank you, Dr. Sheth. So, first of all, let me express my appreciation to you, Dr. Sheth, and all the attendees for allowing me the opportunity to address this distinguished, small audience. Just by way of background, I spent 3 years as the CEO of the Trinidad and Tobago Securities and Exchange Commission, which is the securities regulator in Trinidad. And for those of you who may not know, Trinidad and Tobago is a twin island republic located on the southernmost end of the Caribbean, which is home to just over 1.3 million citizens. The securities market in Trinidad and Tobago is tiny by international standards, comprising approximately 440 registrants, equity exchanges with a total market cap of 23 billion US, 64 mutual funds managing assets totaling US 9 billion, a bond market comprising mainly sovereign bonds valued at 5 billion, and a small repo market. During this period of economic uncertainty, raising capital may seem daunting, but is one of the most critical aspects of building a successful business and is likely to be required at several stages of a business's life cycle. In current circumstances, companies may be seeking access to funding to, among other reasons, augment capital after a period of economic decline or loss, finance necessary organizational restructuring, fund infrastructure that facilitates increased remote working or social distancing requirements, fund M&A activity based on available opportunities, which have sort of blossomed during this period. And of course, fund startups, as the new normal, may create opportunities for new greenfield businesses or activities. The various options available to companies to raise financing as cost effectively as possible include bank loans, angel and capital in the capital market. There are a number of advantages and disadvantages associated with each option. Apologies, I'll just check in to make sure that I am muted. There are a number of advantages and disadvantages associated with each option. For instance, bank loans may incorporate restrictive covenants. They generally offer shorter repayment terms, and repayment obligations represent a fixed draw on cash flow. On the other hand, the loan approval process may be speedier than other fundraising options. The processing costs are generally lower, and this funding option does not normally commit the borrower to public disclosure of financial and corporate information. Angel investors are individuals who invest their personal finances in a startup entity owned by another individual or company. Venture capital firms, on the other hand, invest money into companies with the objective of earning profits from a successful business venture and ultimately capital appreciation after takeout. Angel and venture capital funding can connect the business to an engaged investor, more likely to understand its model and activities, and therefore more likely to provide patient capital. Because of the built-in investor takeout requirement associated with both funding options, angel and venture capital financing provide a good takeoff base for a transition to the capital market. The capital market facilitates the raising of debt and equity funding by companies and the buying and selling of financial securities. These markets allow for direct interface between the investor and the investee or borrower through the issuance and investment in securities. Dependent on the type of security floated, access to the capital market may be costlier when compared to traditional sources of financing, where legal and other costs and the cost of maintaining ongoing disclosure requirements are factored in. Additionally, investors and investees or borrowers are exposed to variations in security values due to market volatility, which may restrict market access for investees or borrowers during their cycles. However, financing via the capital markets can be an attractive and superior means of raising funding that can complement or even replace the traditional sources of financing. In some markets, the capital market is deeper than the traditional banking sector, and therefore the size of successful issues can be larger due to market capacity. For successful investees, capital markets can offer better pricing and longer maturities, as well as access to a wide investment base. Some projects that require funding, in particular the non-traditional new normal projects, may not meet the credit hurdles of traditional banking. Ideal candidates for capital markets funding would include security issues that can connect sector-specific investors with investees. For example, environmentally sustainable projects, fintech initiatives, creative sector projects, and in general, greenfield projects with little or no track record. These projects can contribute significantly to economic development and innovation, but may not see the light of day in the absence of a properly functioning capital market. This market provides options for entrepreneurs to raise capital. These options include the private and public issuance of securities, mainly equities and bonds. In the case of equities, a company seeking to list on a stock exchange for the first time can raise capital via an initial public offering or IPO. A currently listed company can raise additional capital via rights issues. In addition to cash offers, share-for-share offers can be used to fund acquisitions of other companies, and internal share offers or options can also be used as a performance incentive for employees. Equity represents ownership in a corporation, mainly in the form of ordinary or common stock or preferred stock. Bonds represent debt investments in which an investor lends money to a company or the state for a defined period of time at an agreed interest rate. These are traditionally used by companies and government to finance a variety of projects and activities. The private offering is a distribution of securities, for example, by private bond placement to a restricted number of investors, where there are also restrictions on the transferability of those securities to other investors. General marketing of these securities is not allowed. There are certain prerequisites to the issuance of a security in any market. The issue of the security must first be approved by and registered with the regulator as a reporting issuer before the security can be distributed. And the security itself must be approved by and registered with the regulator prior to issuance or distribution. In conducting the approval and registration process, the regulator carries out due diligence processes on the company and its board members. For example, each board member is required to satisfy fit and proper requirements, as well as provide details of his or her directorships in other companies. The company is required to provide its incorporation documents, confirmation of ongoing registration, and its latest audited financial statements, as well as confirmation of a board resolution authorizing the issue. For public issues, a prospectus which provides investors in the market with comprehensive details on the issuer's management, organizational structure, historical and projected financial performance, particulars on the security being offered, and other relevant information has to be prepared and submitted for review and approval by the regulator. And of course, all legal documents or managerial agreements constituting the security to be registered have to be provided, as well as any term sheets, outlining terms and conditions, and a list of potential investors where applicable. Finally, I will touch on the various parties that, through the provision of their expertise, support the issuance of securities. Attorneys and legal advisors provide advice on the legal and regulatory processes associated with issuing a security. They may also negotiate contracts and draft required legal agreements such as trust deeds, prospectuses, and agreements for distribution, managing custodial agreements. Ideally, they should be familiar with the laws and regulations that apply to the securities market, as well as the industry that the issuer operates in. Accountants and auditors prepare and provide an opinion on the audited financial statements in the prospectus. Evaluators assist the issuer in arriving at the issue price or fair value of an equity security. The fair value will provide an indication of the inherent worth per share and will influence the asking price and market demand at the point of issue. Broker-dealers buy and sell securities for their own accounts or on behalf of their customers. Broker-dealers provide distribution services to issuers of securities via a distribution agreement. In addition, broker-dealers can also assist in conducting valuations and preparing the prospectus. Underwriters facilitate distribution by buying securities from the issue and then selling the securities or a portion of the issue on the market. They therefore underwrite all or part of the issue. Stock exchanges facilitate the buying and selling of listed securities. Being listed provides several benefits to the issuer, including easier and enhanced access to capital and increased visibility. Finally, securities depositories are organizations that provide physical and electronic custodial services for issuers of securities. In closing, I will highlight that I have sought to cover a lot of ground over a necessarily limited time frame. Nevertheless, I trust that the information shared has been helpful to you. I once again express my appreciation for the opportunity presented to address this audience, and I hope that you continue to keep safe during these unprecedented times. I thank you.
Paresh sir, you're on mute, Paresh sir.
Oh, I'm so sorry. Hayden, thank you very much for that perspective. It's a very different perspective. You are a very small country with a very small exchange, but percentage-wise, the number of citizens who have a demat account or who operate is percentage-wise higher. So the literacy of the population to engage in trading is pretty nice. It's very nice. So tell me, does the government really promote listing on the exchange? Does it really encourage the companies to get listed? Hello?
Yeah, you hear me?
Yeah, I can hear you.
Yeah. I think the track record there is somewhat checkered. Our sort of economic construct is such that the government is dominant. The government therefore has heavy control over a lot of the enterprises that would, for example, be candidates for listing on an exchange. So that the focus of the government is on holding on and controlling these companies. On the other hand, if I were to touch on, so I mentioned that the mutual fund industry is I would say relatively well developed in Trinidad. I mean, they're close to 1 million of the 1.4 million citizens. There's close to 1 million mutual fund holders, and that's primarily a result over the years of government encouragement through tax incentives and government support of the major institution that sells these funds. So there is the market has sort of moved in the direction over the years of these collective investments. But in terms of actual activity on the stock market, I would say that it's sort of narrowly distributed. Institutional investors and sophisticated investors are very active on the stock market, but in terms of the general population, I would say that activity by that segment of the population could be considerably improved.
Correct. So tell me, does this is the same at Nicholas Tower?
Yes, that's where the stock exchange is located. Yes.
Correct. So does the exchange or the stock exchange do anything for startups or foreign investors? Is it possible to get a listing on your exchange? We have an SDFC Bank listed on New York Stock Exchange. India's most valued bank is listed on NYSE. So can a company from another country get listed on the Trinidad Exchange?
Yes, that's possible. I mean, there's a process associated with that, but a foreign company can list. They have to incorporate locally, obviously, but there's no impediment to that. And there is, in fact, a junior stock exchange, an SME exchange, which is more described as stillborn. It was established around 2011, 2012. That's almost 10 years ago. But its success has been somewhat muted. There are actually two companies that listed last year for the first time. Market response to those particular IPOs was not overwhelming. But there is a junior stock exchange established. And quite recently, the stock exchange on the main market and I suspect on the junior market to also move to electronic trading and electronic listing, somewhat belatedly. But that hopefully over time will encourage more activity, and because it of course makes the whole process of engaging in activity on the exchange easier.
So one final question before we move on. See, you were the head of, you were heading a monitoring body actually, the Securities and Exchange Commission, which is really a monitoring regulatory body.
Yes.
Right. So like our SEBI, we have a SEBI here, and which is a really powerful body. So does your Securities Exchange Board look out for collaborations across the world, or so what I'm asking in really is it outward looking, is it inward looking, is it more into preventing frauds, or is it more into growing the market? So which way is it looking really?
Okay. Most, if not all, of the regulators across the world are members of a central organization called IOSCO. That's the acronym, which is the International Organization of Securities Regulators. So Trinidad and Tobago, like the US SEC, like the Canadian regulator, like the UK regulator, we are all members of this institution, and we pay annual subscriptions to and that opens us up. That ensures that there's collaboration among the regulators, and I guess one of the benefits of belonging to that organization is that we can reach out to regulators internationally to assist us in developing our markets. The focus of the Securities and Exchange Control in Trinidad, as is the case with most of the regulators across the world, is number one, protecting the investor, of course, and AML and so on come a part of that, but issues of fraud. Developing the market is the second most important imperative. And of course, ensuring that the market remains stable. So a lot of our strategies and strategic plans are linked to those three very, very important imperatives. And we're not unique. Most of the regulators internationally, if you go across their strategic plans, there tends to be that kind of central aim, and that derives from IOSCO's aim as an international institution. So we do a lot of work with the US SEC in particular. We do a lot of work with the Canadian regulator. We do a lot of work with the UK regulator in particular. And of course, there's a regional institution. So that is the Caribbean region. So Jamaica, Barbados, where the major stock exchange exists, and the Eastern Caribbean, we work closely with those institutions also.
Correct. So, before I move on to Hitesh ji and I ask him about, internet money, hot money, what kind of money is available for Pitchbook fundraising and all, I would just like to make a comment. One of the official languages listed on Trinidad and Tobago is Hindustani. Which made me really happy. The Caribbean Hindustani, it is called. It's a type of Hindi. Yeah, and it is one of the official languages. The Indian population is between 2 to 5%. They don't have a separate category for Indians, so they categorize Indians with few other countries. But it ranges between 2 to 5% of the population of Trinidad and Tobago. And an official mention of the Caribbean Hindustani made me really happy. So, so I thought I should, take this opportunity to mention that. Yeah.
Let me just clarify. You say the population, the Indian population. What percentage did you say?
2 to 5%, between 2 to 5%. They don't have an official Indian as such. They classify Indian with a few other countries. So.
Okay. So you're talking about you're not talking about the domiciled Indian population. You're talking about.
I'm talking about the overall Indian population in Trinidad and Tobago.
The overall Indian population in Trinidad and Tobago is much higher than 2 to 5%. It's closer to 40%.
Oh, that's very cool.
40%, yes.
That's very cool. That's really cool. And Caribbean Hindustani is really cool. So, Ankur, Hitesh, Mitesh, we should all really, try and do business there. They have classified the language as one of the official languages, Hindustani.
We find Indians anyways. Sure. This is a proof that Indians are everywhere.
Oh, yes.
Correct.
Yes. No, it was nice of you, Hayden, to, I really appreciate you taking the time and talking to us. We really appreciate. See, when I started CASI is all about CSR and sustainability. So, people relate us saying we are about sustainable development goals. But in my mind, it is not about sustainable development goals. CASI, when we started CASI a decade back, and in New York, and now we are present in 52 countries. We have over 1 million students. We run the world's largest volunteering platform with over 3 million volunteers. The number of my volunteers is equal to a small country's population. So in my mind, it is not only about SDGs. The way I look at CASI is it's a platform which promotes one, CSR and sustainability, and two, in a major way, entrepreneurship. Because only if people have their stomachs full, then they talk about environment and climate and health and education. Because the basic requirement is to have bread in your stomach. So for me, CASI is a platform where we encourage CSR, sustainability, entrepreneurship, and number of other things, which will lead to the planet being sustainable. So that is how we operate, and that is why in this season 2 we are calling the finance experts. We are leaning on to you for advice for startups. Where should we look? How should we look? How should we raise money? Because it is all about creating jobs. We can have the best possible climate in the world, and if we are not able to create jobs, then the climate is useless. Really, we need to get food to the people. We need to give them something to do, and then it will all make sense. So that is really our philosophy, and that is why entrepreneurship and creating jobs is a very big way of life at CASI, and that is the core reason why we have invited finance people today. So that our volunteers, the millions of students, can learn from all of you about what to do, what really happens in the financial world. So with that, Hitesh bhai, please tell us, your opinion on, Pitchbook fundraising for startups.
Thanks, Paresh, for this wonderful platform and inviting all of us. And it's a really good to interact with across geographies and to get to know what is better in that front, what we are doing, and to just fill up the gaps. To start with, let me first introduce myself. I am heading finance at Magic Bricks. Then it comes to what Magic Bricks is. Currently, I'm working on application of technology, cost cutting, building strategy that makes MB a future ready company. Deploying robotics, process automation is currently I'm working on. Before working with Magic Bricks, I have worked with brands like SRF Limited, NIT Limited, and Citigroup. Magic Bricks, it's India largest and most trusted property marketplace for all property related needs, enabling buyer and seller with the help of technology. So we are number one property portal in India. We have a maximum choices. It's one of the most visited platform. And it's a part of the largest media conglomerate, Bennett Coleman, the Times of India group. Now coming to the topic is Pitchbook fundraising leadership strategy for startups. So let's start with the ending words, everything about startup. Let's look at certain numbers for the Indian startup ecosystems. So totally we have in nutshell 55,000 startups launched in India. And as on date, there's a 40,000 active startups in India. So when we say active startups, so there are certain institutes which registered these, which is DPIIT. There are 33,000 kind of startups out of these 40,000 active startups are registered with DPIIT. When coming to the funding, the consolidated funding raised by these startups is $63 billion. And these the deals which comes in, it comes from 5,400 funding deal that Indian startups have witnessed. Average time taken for so when we take so we know that a lot of Indian startups are already unicorns. So as per the data available, average Indian startup has taken 7 years to reach a unicorn status. 4,640 investors participated in Indian startup funding. It's a huge. So when I say 7 years times taken from the startups to reach a unicorn status, we have 34 unicorns in Indian startup ecosystem. So that's a huge number. And most active VC in Indian startup ecosystem is Sequoia Capital. So that's a brief about numbers when we say about the startups. What we say, Indian startup funding expected to fall by close to 36% in 2020. So that's a kind of setback. So that's a recent report that being come by Data Lab source, which says the funding is definitely going to. So they did two sources. So they did two case studies. One case study says the funding will be expected to fall by 11%. In the worst scenario, it will go by 36%. That's a COVID impact. These 34 unicorns, they have racked a total revenue of $9.2 billion in the last year. When I say the last year, it's between FY 18 and 19. So that's the period they have picked in that. And the total expense is close to $12.2 billion. So still, the revenue is fall short of expenses, but that's a kind of volume we are generating. So when I say on the last part of the startup piece, when we say the startup in Indian ecosystem, when we compared total top 10 startup hubs in India, the ranking will be follows as this. So the most active city for the Indian startup is the Bangalore city, followed by Delhi NCR, Mumbai, Chennai, Pune, Hyderabad, Ahmedabad, Jaipur, Kolkata, and Goa. So Goa in this list seems that there are certain founder who wants to go to the coastal region and want to chill and also work on the startup part. So that's a brief about startup. So when I say the funding, why I need a funding, it's definitely that's already answered by Biden in his the previous talk. So when we look at the funding stages, how we get our different sources. So there are close to 6 stages, which already briefed by. I will not take a much time. Starting from an idea and concept stage to development, then the go-to-market stage, then it comes a growth stage when everybody is already tested that a kind of the platform has already been tested, your organization has been tested. Then you want to go into an expansion, and then the last stage is the growth, and you're going to a public stage. All these different funding stages have a mix of investors starting from your own friends and family. So when we say, everybody says that the first, when you call it a seed funding, it comes from your friends and family. Okay, so there are I recently heard one conversation where they say there are 3 F which comes in the seed stage. So friend, family, and other, that gentleman already nicely captured. It's a fools. So when I say it's a fool, means somebody you are testing your plan, but he just got a trap. So he said friends, family, and then another category is this. Is it so? Seed funding generally looks at your own sources, moving to your venture capitals and then public market. So that's already been covered by Eden. Again, so when we move on from one stage to another, it goes from seed stage to angel investor stage to early stage. Then there is round A1, so series A, B, C, people and say, and then there's a mezzanine when you go into that. Another important thing about the funding is why. We talk about startup and then the funding stages. To get a funding, the pitch deck is important. So why a pitch deck? Okay, human are a visual creature. So no, that's not a statement to convince you to use visual aids whenever you want to get your point across. Scientific fact. Half of the human brain is directly or indirectly devoted to processing visual information. That's already we know from our schooling stages that the visual representation gets back to into your mind, and you are easy to recall that. Now that science is of, it's very clear. Let's move on the part where I say that you need to use your visual aids. So that's a point where the startup needs a pitch deck. Okay, so we did certain. So as per my experience, so the pitch deck consists of there are certain core elements everybody put in their pitch deck. So one that's definitely is what's the company purpose. That's important aspect go into the pitch deck. Other thing is what's the problem you have identified, and what's the solution for that. So these 3 things becomes a core part of pitch deck. Means what's the purpose of your company, what's the problem, what's the solution. Another important aspect that comes is why now. That's the timing is most important. So when so this is the most important part, the timing. For example, if you look at YouTube or any successful company, the timing was very important. For example, Airbnb, when they launched their pitch deck, it was the time when there's the recession and people are short of money, but they launched their product at that time. Similarly, YouTube, even when the YouTube was launched, it was not thought of that it will become a so big product, but they launched when the broadband is just kicking in, when the video consumption is getting increased. So there are a lot of examples when we see the timing is most important. Other which goes into your pitch deck is the market size. So what the size of the market you are capturing, followed by what the product you would be offering to your this market. Another important thing is the team. So you should look at how your team has been with you the overall journey from seed to a particular funding stage, and how you are making the lock-in for all these founders in your pitch deck. Then comes the numbers. So number, when I say present the business model, the Excel, all that gives something about competition and your financial. So these are the important ingredients of a good pitch deck. So when we say, which is the important thing, I already discussed, it's the timing. When you look at funding for the startup environment, so there are certain crowdfunding concepts in India like Miso Town, Kato, Wishberry, Dream Wallet, Start 51, all that. But definitely the funding comes from a kind of your experience into that. But definitely you can, if I say, you can definitely look at a certain line of credit. You can trade equity or services. You can negotiate with a strategic partner. You can join an incubator or accelerator. You apply for a angel investor group. Pitch your friends and family. So that's how the startup starts. Other thing we in this discussion is important is about the leadership and strategy for the startup. So when I say what's important for that, so let's look at outside-in approach. Okay, so a founder has to look at think with the possibility mindset. What would do if the things were possible? So that's thing. Bring what you love into what you do. So definitely that's the most important task in any of the startup. So when a startup is when the founder is pitching their business, they should get into what they love. They have a strong sense of purpose is also required. Also, they should focus on communicating the correct vision. So why a particular startup is being started. Another important thing is empathize with your team. Get really good to of writing to kind of recognize the weakness of your team members. So that's a kind of outside in approach. So when I look at inside out approach for the leadership strategy, one is the founder has to be confident. He has to be passionate. He has to be kind of a positive approach. Another thing is he has to look at plan. So definitely plan. Project teams run on a planning, but the different planning company does need to be carried out with the entire team. Another thing is a leader is someone who wants to follow, usually because they shown personal integrity into that. So he has to be responsible for that. Other character that comes in, he has to motivate and be humble with his team. Understanding is a team is important. So all these traits that's particularly look at when we look at what the traits for a leadership capability, and that's all comes in. Another thing is he has to communicate at kind of on all levels. So that's a brief on pitch deck, startup funding, the leadership trait. These are the topics which definitely needs an hours of discussion. So just to finish that in, it's a kind of just to conclude that why startup fail is there are certain as per experience there are certain startup who just throw unwarranted kind of challenges to employee. If they focus on individual targets rather than team goals. Most of the startup also fail because they just keep on ignoring the competition. So justifying failure and saying that is okay is also kind of an attitude we have seen in most of the startups we have evaluated. As a Magic Bricks, also we have a dedicated fund where it's not a fund, it's a kind of, so we also keep on doing decision build versus buy. So we also evaluate startup on different parameters, whether I should invest in that startup or invest that money plus time for making that product. So that's a kind of an experience that say about why a particular startup is failing. So that's from me. I think I have covered in the 8 minutes or slightly more than that.
Thank you very much for that interesting perspective. I have a couple of questions. One more about Magic Bricks. What are the kind of startups that you have funded or you are looking to fund?
Okay, so we are a closely held company. So most of our investments are in the stick mode. So I will not able to share on that, but mostly it's a build versus buy decision. So when I say when we are making a certain product that's it's ahead of technology, and there is a certain use case of startups who are looking into in that particular platform. So that's a kind of my market for getting into that particular startup. So that's one.
Okay. Well, why I asked this because we have over 3 million volunteers. Most of them are students and they are excited about
So it's in
startup
real
business.
estate. Yeah, so it's in the
So,
real estate. For example, the new products that's so we have also a different horizon of growth. So when I look at my H2 and H3 horizon, which includes making a Magic Bricks kind of a marketplace model. So different things comes in. So we want to grow from a kind of particular a search platform or a discovery platform to the complete your buying journey across all stages. So start from getting into a particular property, buying that property, financing a loan, and when you wanted to move into that particular home, there are certain services associated like legal agreement, validation, due diligence, vastu. When you move in, then there's the movers and packers. So all these different services getting attached to your buying journey. Real estate portal as of now are being seen as a discovery platform. Means you go to the
Correct.
portal, you do your search and get that. But Magic Bricks is getting into all these services. So when I say these services, so if a startup is good at that particular services, we value that services. Whether I launch this product now, because each product, each buying decision comes with certain cost. It's an opportunity cost also. So mostly when we do a sleep mode kind of an investment, these founders comes on board on the Magic Bricks payroll and work as employee. So it's a kind of acquihire kind of a model, which we, and whatever the investment we have done, that's in the split mode because we
Okay.
are not
I
listed.
have another question for you.
Yeah.
So, you mentioned that startups and founders should do what they love doing.
Yeah.
Yeah. Now, don't you think that is a cliche? I don't think the guys at Google, liked giving information, or the guy at Uber liked dropping off people, or the guy at Oyo
Hmm.
liked hotels. I don't think he had the capacity to stay in a hotel. So,
No. So when I
why is this
say,
so much? Why is this important?
yes, yeah. So when I say it's, uh, it has to be comes with a passion. Okay, I'm not saying. So you have given the right example of Uber also. So when you go back and see the Uber pitch deck, they identified the problem. So again, their problem statement comes in their pitch deck is the drivers are not earning much. So their passion is to make all the fellow drivers to earn more.
No,
That's
I
how.
understand that, and but I think that is more. This is just an opinion,
Mhm.
but I think that is just in hindsight that you say, okay, drivers are not earning more. What do
Hmm.
you think Zuckerberg was trying to do when he made Facebook?
Okay, so that's again a different story.
Really, he did not have a problem and a solution.
So what I want to say is bring what you love into what you do. Is bringing is so just tell your employee or yourself or your employees to bring passion in what you are doing. So that's what. So if you're following your passion, then definitely the loves also comes in. So it's a subjective, but that's my intent. So what's your passion?
No,
That's
don't
the
worry. That was a trick question. I always ask this question. That there is
so
no
definitely. So
real answer to
if
that.
you're if you are love doing something, then it's give you energy to kind of keep you doing that. If you are totally draining out, then definitely this will not survive much and you have to drop that. So that's a kind of a limited point to that.
Done. I have one more question, and anyone can answer this. You can answer this. Ankurji can answer this. The numbers that you mentioned in the beginning,
Yeah.
the billions and the
Correct.
unicorns and all, they sound very fascinating.
Yeah.
But when you get down to brass tracks and you compare it with a smaller country
Hmm.
like Italy,
Yeah.
or a larger country like China, we are really nowhere.
Right.
The numbers don't add up because the per capita or the per population
Hmm.
or per state, we are doing a dismal. We are doing dismal, and
Uh,
also it is always said that India may have a lot of billion-dollar companies, unicorns, or whichever way you look at it. We are not really an innovative lot. We don't innovate. So
mhm.
there is no innovation. So what is your opinion on that?
So again, it's a tricky question. So whatever the current Indian startup is, so there are certain innovation, but definitely most of the things are already being copied. So when I say this copied, because there are set market which these models are already tested. When I about our scenario, our real estate platform. So if you compare Magic Bricks or my competitor 99, which is a part of Info Edge Group, with the developed market, UH, and we are minuscule. Means it's a too less to kind of even comment on that. So that's already developed markets are already tested these scenarios, and definitely when you talk about innovation, it start with the innovation, but because each startup will have the different distinct idea, whatever the numbers I have said. So if I've said there are close to 33,000 registered or kind of a 40,000 registered, definitely out of 55,000 that startups launch in India, these 40,000 which still active after the pandemic and COVID scenario, they must have some distinct idea. But yes, it's a big fish which eats small fish kind of a. So they have multiple segments and they try to kind of avoid further competition. Maybe the second add on that Ankur can add on what I
Yeah,
said.
sure. Actually, so as Dr. Paresh asked, I quickly Googled to check whether what he's saying is, partly comes very correct. Like, it seems like that. But two data points came up. One was that we are the third largest in the world in attracting the number of unicorns we have. And the second data that came up with that we are almost number five in starting a startup in the world. So these things are, it's a very, we obviously cannot compare with the US and China because they started much earlier in advance and we have a long way to go. But I think we are catching up. I think that's what most important. Are we in the right direction? Are we able to do the right things as an ecosystem, as sort of investors, as the entrepreneurs which are coming in, is the government, etc., doing the right things? Of course, we can always spend like a couple of hours just finding out mistakes that we have, but are we in the right direction is what important is. Of companies we have been seeing ourselves. So I will not say that I have a large illustrious career of 10, 20 years of India to be able to talk about startups specifically. But at least the kind of startups I've been seeing for the last 5, 6 years, there's a big dramatic change in the kind of companies that have been coming in the market, and the kind of business models they're coming in, the kind of founders that are coming in, the kind of thoroughness that they have in their execution skills, the kind of quality they bring on the table, and the innovation is also changing. At the beginning, right, 2014 to earlier days, it was a lot about US China models coming to India and doing it, but now it's changing a lot. It's all about really looking at Indian problems and solving it the Indian way. And I think I'm not saying that that's the only way, right? So of course there will be situations like TikTok is banned and there's a lot of other competitors who are just copying TikTok and using that advantage to it. But finally, I think there are a lot of other businesses also which may not be known to the public eye, right? But they're still early stage because they're growing and they're sort of developing their businesses, but it's going in that direction. Like for example, COVID has resulted in suddenly everybody looking at agri-tech very, very closely, right? It's a sector which was not really looked very well, but now it's become a very important sector to look at. Similarly, health tech is another space, again, as another space which is again taking a lot of interest from everyone. So some of these things which have happened, like the pandemic, we would not have expected some positive things happening out of it, and that is what we've been seeing very, very closely happening. And things will only be better for the overall ecosystem. So obviously we are investing in India. I have to be very positive on the country as such. But I think the truth is that I think things are only improving. I think you take.
We are getting there. We are getting there.
Yeah,
So what you're saying in essence is we are getting there.
Yep.
Yeah. So I have one more question. We can start with Ankur and then the other speakers. And then we come back to you, Ankurji, for your opinion on the entire startup framework. Is that okay?
Yeah, sure.
Yeah. So my question was very simple. See, and you go to a lot of CII or Young Presidents or Angel Investments or Mumbai Angels and all these meetings, and everybody is encouraging startups and innovation and entrepreneurship. It's crazy out there. And if a student visits 3, 4 of these sessions, he gets very motivated that yes, I should become an entrepreneur. Now, when you do a review, I feel and correct me if I'm wrong. It is just a very loose opinion that when you are doing a startup and when you are going for a funding, it is not the money that counts. It is the Mohit Bhatnagar or the Vani Kola or the O3 partners. That Tiger Fund. That is really what counts. So if you raise, let's say, $500,000 from Mohit at Sequoia, it is probably 4 times more than the $500,000 you raised from your uncle or someone else. And that really is the deciding factor between startups which succeed and which don't. So it is not the technology, it is not the idea, it is not the execution, it is not n number of other factors. It is only the Mohit Bhatnagar as a factor in your startup which helps you succeed. And this has been noticed time and again, because there are 10 startups doing the same thing in a better way, and there is one startup probably funded by an O3 or a Sequoia or a Tiger, which usually succeeds because they have bottomless pockets, or a roller deck of visiting cards on Mohit's table, which is never ending. So that sort of gives away the illusion of entrepreneurship, and says that you should do entrepreneurship only if you know a Mohit or a Manikola or a Tiger Fund. Otherwise, you should not venture into entrepreneurship. So sometimes my students get this feeling. So I ask both of you, or even Hayden, three of you, what is your opinion? Is this true?
To start with, correct. So there are multiple your angel investor group. So I am part of two angel groups, so I can easily compare. So one is the Mumbai based, another is the Delhi based. So Mumbai is the Mumbai Angel Network, another is Delhi's IPV, Inflection Point Ventures. When I say so both have their own merits and demerits, but when I compare IPB with Mumbai Angels, so there is a significant difference between the two approach. One, which you said, definitely they want a kind of a name tag with them associated. So the people, all the founders that's coming for pitch, they comes with the intent to get a good backing for product. Their product. So once they enter into whatever kind of an horizon or the ladder they are seeing, the end objective is to either go to Sequoia or Tiger or whatever the names of the world. They do that part, but when I compare IPV, here again the Mumbai Angel Network means you have to go there, and then there on that day there's a kind of a 4 people are coming and then presenting. They completely work on that point. But when the IPV, they have a different. So they work on worthiness of the founders. So they evaluate close to 3-4 founders on Saturday, and then there are complete process on that. So yes, there is a mix of that. But when I see a bigger one, not bigger one, a kind of a one approach, it totally works towards getting into number and getting into that pockets. Another is work on their credible. And there, most of the angel investors are kind of CXOs and the good in the industry, and they also review that. So there's a set review mechanism. So there's a process also defined, monthly review, quarterly review, and they give the input. So I have seen also this kind of review between the of the startups, and then getting the startup hand holding to the next level. But yes, you rightly means you rightly said that tone about getting into all the startup folding back to the secure one. But from angel point of view, I have seen both one.
So I
Correct. Well, what is your opinion, Ankurji?
So I
please.
Partly agree, maybe partly disagree. So again, it's not like I have it's not a straight answer, like yes or no kind of answer. So there's definitely no doubt that if you have one of the larger marquee name investors as your shareholder, it's a very different pedigree you get in terms of furthering your existence. But I have seen enough companies out there in my own existing portfolio also, companies which are able to raise maybe very limited capital, like I would say limited capital, like less than like $1 million kind of thing also. But the grit of the entrepreneur was so much that he took his, those tough years, 2 years, 3 years, 5 years, to sort of reach a level where suddenly he was able to attract capital, right? So our ecosystem has evolved a lot that you don't really need only a Sequoia or a Kalari Capital or a Tiger Capital money to survive, right? There are enough other investors out there who can help you there. And more importantly, now there are larger sort of groups, like a strategic groups. Like for example, we have Hitesh himself give an example that we will acquire a company if it makes a sense for us, right? So there are a lot of other companies out there who can also come and sort of acquire you in the fund or may become a strategic investor. We have seen them also becoming very active in the space. So it is definitely 4 5 years back, it was only like this 5 10 investors you definitely need to survive. But the things are changing again. So again, it's similar to maybe my answer in the past, but I think things are evolving. It's entrepreneurship is not everybody's cup of tea. I'll put this way. It's not that it sounds very cool. So to become an entrepreneur, to have a startup and all, it is very tough, right? It's tougher than what anybody can make out. The number of sleepless nights you go through, the kind of the number of meetings you have to go through. Anybody to attract a Sequoia Capital also has to go through 50 meetings, right? So uh, the kind of determination you need to go through it's not easy, right? So it's easier for some people to just get your monthly paycheck and survive with that. You can do well in that also, right? So that's why when Hitesh said you need to have a passion to be an entrepreneur, it's not like tomorrow you can just decide to become an entrepreneur. You need to have a certain kind of mindset, skill set, and then some kind of I would say I would say you're born that way. You may have the talent, may not have the talent, but you have to be having that kind of notion that you're eating, sleeping, drinking about your company, right? If you do not have that kind of passion, then you cannot be an entrepreneur. Because like I have started this company like 10 years ago. I have gone through a lot of things over a period of time. I don't think this was possible if I was doing my investment banking job, seven like before that, right? When I was at Citi and JP Morgan, I don't think I had to worry about in the night what will happen tomorrow. I didn't have to worry about next client. I don't have to worry about those things. Even if you're a senior person in one of the best category, you don't really have to worry about it. So there's a very big difference in that. And if you have those skill sets, I believe you can attract the right kind of capital or members. And now what has happened is a lot of founders have become your team members, right? Because as Hitesh would also know, a lot of founders have started their own angel funds. They are backing existing founders. So when you don't really need to just wait for those 5 names now. What I'm trying to say, there are enough people out there who can back you if you have the right idea, right product, and the right sort of business out there at the right time. You will be able to attract capital. It may take time. It's not an easy thing. I don't think anybody can say that you are like, even if you're IITian and you have IIM in your CV and you've worked in the best companies, you have to put a certain level of effort and you need to have a sort of plan to be able to attract capital. After a point of time, even Sequoia cannot help you. See, Sequoia cannot keep funding forever, right? After a point of time, your business has to make sense. Otherwise it will die down. It's not like all 150 companies that Sequoia has funded are all unicorns, right? Still they have those few percentage companies only who reach a unicorn stage.
Correct, correct, correct. Absolutely, Ankurji. Please, tell us your angle. Share your angle on the startup.
Sure. So a lot of things already my co-panelists have covered, so I will not sort of try and touch base on that again. I will try and see if I can add some other perspective to things which have been discussed earlier. So like first to begin with, like almost the globally we have seen almost $300 billion of capital being poured into startups for the last 2 years each. $300 billion each for the last 2 years, right? So that's like showing something that the what way in which direction the world is going, right? So this is not a phenomena only sort of existing in some specific countries. It's actually happening around the world and across countries, whether it's North America, whether it is China, whether it is India, Asia, etc., or even South America. This capital has been growing, right? Except in Asia last year it was some sort of fall happened, but it's happening globally. And fintech has been one sector which has sort of attracted the maximum amount of capital, followed by healthcare and followed by SaaS, right? So these are the sectors which have seen a lot of growth even in India. So it's a phenomena sort of which has been again sort of, we would say we might be duplicating or copying, but it's actually something which is happening around the world. In India already we have spoken about, it has spoken about the kind of growth that has happened. So I'll just talk about the sectors again here now. Post COVID, head tech has become one of the most hottest and most sought after sectors, apart from gaming being another one, right? So these things are sort of seen that there is a lot of user getting coming on board and sort of seeing like how things are being picked up. And what we have seen is that a lot of unicorns have come during even this period of time. So there was obviously this reports and all, a lot of startups are dying and all. But what I have been seeing is that startups have taken this opportunity to show why it is cool to be in a startup, because they have been able to reduce costs, they have been able to even attract clients, they have been able to use the digital front very well, and they have shown why they are up there. They have the business up the alley by being able to go against traditional kind of businesses and show how they can grow faster, right? So there are a lot of businesses that we are working on B2B side, that we have seen they are able to use the fragmented businesses, trying to use their platform and technology to sort of attract customers. So what I'm sort of trying to say in a nutshell is that whether you take any sector, as long as it's an interesting business idea and you're a good entrepreneur, after a point of time, if you have the grit and determination, you will be able to attract funding. But what people start thinking that funding is the only the determination of success. That's not really the case, right? Funding is only sort of giving you the ingredients to grow to the next level. There are a lot of businesses out there. If you sort of Google, you'll figure out there are enough businesses who were bootstrapped, didn't really raise a lot of capital, but able to grow at the same time. And they took maybe a longer period of time, but they were able to do it profitably, right? Because people forget that you can make money. You don't really have to raise funding, right? If you make a business where you can make profit and use that profit to invest in your business, you don't really need funding. But after a point of time, startups, the main goal is to be able to grow very quickly and to be able to get your market share, etc. Right? So
Hello. Hello.
yeah, please.
Ankurji.
Yeah,
Yeah, Ankurji, I have a question. Hello.
yeah, please.
Yeah, I have a question specifically for you, and
Sure.
this could be interesting for Hayden and Hitesh as well. This before when you and I spoke earlier. So you come from the debt side. You provide debt to startups and entrepreneurs as opposed to equity. Yeah.
Correct.
So is there a resistance among founders of startups to take on debt, saying hell, I am running a company, and why don't you pick up equity? Why will I want to raise debt? Or do the founders prefer debt so that they repay you and the stake remains with them? How does it operate in the Indian market? What has been your experience?
So I think obviously, if you give an equity check to a founder, he will always prefer equity over debt generally, right? But there are a lot of founders out there who realize that for them capital is important. It is just not whether the capital is should be only equity type. It can be even be debt type. And now I think over the last 4 5 years, there has been enough situations where the founders actually spend extra time just looking for debt. It's not that they're just looking for equity.
Hmm. So you're saying now
They are realizing
founders
that you can't just keep growing business on equity, right?
So you're seeing now the founders are smartening up and they're looking at debt options more than equity.
Correct, correct. Not more than equity. Equity will always be the case. There are cases. What happens is there are businesses that we have backed that they become EBITDA break even, right? Or they become cash flow positive. Then for them it makes sense if they can raise more debt, they can grow with that. Why they don't need to go and take equity, right? So and sort of reach a certain milestone, which after which they can sort of reach and go and take equity. So because you can keep diluting after a point of time, it may not make sense to keep diluting, right? Because our sort of perspective is there are a lot of businesses they need to invest in inventory, they need to invest in receivables, they need to invest in capex. Why do you use equity money? It's very expensive money to sort of fund that. You use your debt money to do that, right? There are businesses which are under having some kind of capex they have to do. Like for example, you mentioned Oyo Rooms, that they were one of our investing companies at one point of time. So they had to invest in a lot of hotels, right? So you can't just keep when you're adding 10,000 keys a month, you can't just keep investing so much amount of money using equity, right? So you will sort of burn that money very quickly. So if you have a debt partner and the debt partner would like to see whether the cash flows are there of that unit, right? So when you're invested, I'm just saying that an example, if that hotel is able to return their capital in 2 years, so why not use debt? You don't really need
Correct,
to use
correct.
equity for that. So that's what people are realizing. As you said, the word Sprite is smartening up. They started using now the traditional business lens has become more and more important of profit, right? So before, without that, it doesn't make sense for them to grow. You can't just keep grow based on metrics. You can't keep growing or the number of people who are coming on my website, the number of people who are sort of maybe transacting and GMV. That is not only thing that matters, right? Now people have understood that profit is critical, and COVID has only pushed us in that direction.
Correct, correct, correct. See, with that, we come to the, we are nearing the end of our session. We will reach out to our audience for a few questions. But I still have two questions, one for Jaisal and one for Hayden. Hayden, your geography, your economics of Trinidad and Tobago are very different from our Indian circumstances. What really is the market there for startups to raise money? Is it difficult?
Yeah, I've been following the conversation with some interest, and let me quickly say, I mean, from our perspective, the entities that engage in angel funding and venture capital we kind of look at that sector as transitional, because the aim is to kind of develop the capital markets, expand the investment options. And so an angel financer, I mean, from our perspective, is in for a defined period, 3, 4, 5 years, set it off, offload either publicly or otherwise, and create room for more investment. And the offload develops the capital markets, because people who didn't engage in the capital markets before have that option. So that's sort of my very short response to all that I've heard this morning. In terms of the options available to startups, it is difficult. I mean, it's essentially the bank market. Most of the startups are not equipped to properly engage the capital markets. In some of our jurisdictions here, we've instituted what are called mentors, so that people we put on the board to kind of walk founders through the whole process of listing and what is required and disclosure requirements and so on. And that has helped to some extent, but it's difficult. And of course, in terms of the bank market, in our part of the world, it's gotten more selective. It's gotten more difficult for prospective borrowers. So it's tough. A lot of the listing activity, a lot of the people, the entities that are considered strong potential for listing are actually existing small companies with a track record that are privately owned, owner seeking to cash out. Maybe there's no succession, and those are the entities that we look to, rather than greenfield new companies and so on, to kind of be listing prospective listing companies. Mm-hmm. So for a startup in our part of the world. And they have to meet the traditional requirements, security, and 9 times out of 10 they're not. They don't have the infrastructural arrangements in place. They don't have corporate governance requirements being met. They don't have financial information, etc., etc.
Okay. Because there is a lot of economic difference. So I thought I'll ask this question. Jaisal, are you there? Because I had a question for Jaisal. No worries. We turn to our audience. Vahuka had a question, or Francis had a question. Somebody had a question. So please feel free to ask questions.
No one else? I'm happy to ask if.
Yeah, please, Patrick, please.
Yeah, so basically what I've mentioned before is my view is that the more startups you have, the higher number of startups that are surviving, and also as diverse as possible, the better chances you have that you get good innovation. And I'm looking at it from the sustainability point of view, that you get something that is useful. So my concern is when I hear unicorn and so on, I think, or also if everyone is aiming to become a new Facebook, everyone is focused on the same thing and not trying lots of different things, or all the financing goes to a small number of companies rather than broad. I think both of those things reduce the potential for innovation. That's just my perception. And my question is basically, is my perception correct? And if so, what can we do to make sure that the startups are as diverse as possible, and also as many are surviving?
Ankur, you want to handle that?
Sure. No, I think that perception is correct, I think. But how do you correct it? It's a different question altogether. But perception is correct, because the people who are funding all these companies are venture capitalists, right? And their only motive is profit. Sustainability may not be their top goal, right? So sustainability might be the goal for some of the sustainable focused kind of funds, but for most venture capitalists, they all have to look at multiple that they have to make on the capital, and that is the goal. That is the sort of mandate that has been given to their investors, right? For them, 5x, 10x, 20x is what everybody's trying to make up, right? And that's what they're promising to their investors. So everybody is obviously in that goal for their having their portfolio have some one or two unicorns in that. That part is correct, but the other part is about being broad based. I think that's what is happening, right? Because what happens is when your country has so many unicorns coming in, the more and more investors it attracts, right? Because only when people will make profit, then people will come in a country, right? If a country is not able to produce many large companies, right, out of the overall number of startup ecosystem, then there will not be enough people who will be coming and working in it, right? And if the companies are not financially stable, even they will not be able to attract employees in it. So it's sort of, I would say, a chicken and egg thing, that you cannot expect that we do not have enough unicorns. Of course, one should not just as an entrepreneur, when you start a company, your objective should not be becoming a unicorn, right? That could be a side goal that can happen. That could happen because of your impact or the kind of results that you bring into the business. But most VCs will always look that I would like to have the next unicorn on my table, right? But they know practically when they're funding 50 companies in their each portfolio, or they're funding 20 companies in a year, or when there are angel networks working on, they also know that all the companies are not going to become a unicorn. So there is obviously a fascination for it, but everybody knows in the back of their mind that not every company is going to become a unicorn. So, but when they are funding, when as a company goes from a series B to series C, or series C to series D, there the funding gets tougher. I That's how at least in the Indian markets have become, like it's become like a pyramid. So there's a lot of angel transactions. There are a lot of deals happening on the series A level, some deals on the series B level at the moment, but after series B level, once you've raised 15 $20 million, after that raising capital becomes tougher, right? So then the future for that company becomes only on the basis of whether you could become that next larger company, or are you in a space which is very interesting. So that fundraising is getting tougher. But again, solution for that is, as you have to make your business interesting to be able to attract capital, right? Or you have to attract a strategic person to come in, or else there was no business to be in it, right? Otherwise, the company will have to die. But sector-wise, I'm seeing across, I think, worldwide, whatever little bit we follow, there are enough innovation happening in terms of ideas and kind of people who are coming in, and the kind of quality of entrepreneurs which are coming in and trying to do different things.
Yeah, I just
Correct.
want to add.
And
I just want to add.
yeah, yeah,
So,
please.
what valid point, and your perception is right. But in the funds, the larger funds, now they already have started a kind of a dedicated fund for the smaller businesses. So now they also allocate their portfolio, a good amount of portfolio, to smaller businesses to look into that. So again, correct what you said.
Yeah,
Thank you.
Patrick, I'll give you a macro perspective. These are micro perspectives. So I'll give you a country level perspective. I have been an investor in New York, and I have been an investor in India. I have offloaded a payment gateway company to a listed BSE company. So I'll give you a macro perspective. What happens is, in a country like India, for the last 30-40 years, you can just close your eyes, buy a property, just keep it, any residential or commercial property, and you get 6, 7, 8, 9, 10% returns year on year. And when you can do that blindly, it is difficult for a person to invest anywhere else. Because you get 10% return just closing your eyes. You don't have to apply your mind. Your 9-year-old son can do it, and you still make 10% returns year on year on a property, the construction market. Now, that is something that happened in Italy, I'm told. And now, for the last 20 years, the property market in Italy has gone down. And then people are looking at other avenues of investing. Also, add to that the 7, 8, 9, 10% rate of interest that we used to get on a bank fixed deposit. Yeah. So, I have seen days I have invested my own money at 12%, in fixed deposits, and then 10, 9, 8, 7. Now I think the Bank of Baroda investment, the FD rate is 4.9. There are countries in Europe which have a negative rate of return. or a 1% or a 0.5%, US, Europe, Japan. What happens is if you have $1 million in Japan, you keep your $1 million in a bank and you earn zilch. Yeah. So, you know, how will you take care of inflation? And that is why you don't have a choice but to invest somewhere else on someone else in order to make a return. But in India, if you have $1 million and the bank rate till now was 7, 8, 9%, you keep it in a bank, you are set. Your children are set. So you know that is at a macro perspective why HNIs or family offices or large corporates were not investing in startups. Why take a risk at all? When the federal rate was 9%, you don't need to take a risk. But when the federal rate goes down to 4% and the inflation is at 12%, you need to take a risk. You know, so now times are changing in India from a macro perspective, and a lot of people are looking at investing in this crowdfunding. It is not the platform which is great. I think none of the crowdfunding platforms in India are up to the mark, but they are doing well because people are looking at avenues to invest from a macro perspective. You know, because you don't have a choice. If the bank rate is 4%, inflation is 12%, your children will not get your money, so you need to invest. So now under these circumstances which you as a European are aware of, you know, so these are the circumstances which Europe or US or Japan has. Now it will force people to invest or look at other avenues. So now the money will not go after 4 or 5 unicorns. In the next decade you will see money going after every small founder, after every small entrepreneur, because everybody will need to invest, because the bank rate will be so low that you can't beat the inflation. So that's from a macro, very macro perspective. So you're talking about 100 billion, 200 billion, a trillion in investment. So this is how the money flow will happen, you know.
Sounds good.
These are good days for entrepreneurs. If you know, if the HNIs, family offices don't have a choice and the construction market is going down, this is the time to be an entrepreneur, because the rich people don't have a choice. No, no, Vahuka, you have a question?
She's not able to get her mic on. There's some issue with the mic.
So could you ask the question for her?
Yeah, sure. So she just sent me her question. It's basically saying that if you're saying that entrepreneurs need to be consistent, so what, according to you, is consistent? Being consistent. So any of the speakers could take it up.
I didn't understand the context of consistent, but I will sort of try and give my sort of thing that what happens with entrepreneurs is that there have been people who sort of come up with new ideas, right? So you start up with an X kind of business model. 6 months down the line, you meet them, they are doing Y business model, and then 6 months from then, they are doing a Z business model. Though it might be in the similar space, but you keep changing and pivoting too much, right? So then what happens is it gives you a very different perspective whether this guy really knows what he really wants to do. Though market change, businesses change, you have to pivot, you have to understand the market reality. But if you're not really consistent when you're approaching maybe a customer also, right, you're changing your offerings all the time, then it will not sort of help you to go to the next level. So of course there are enough stories. I don't think there will be a startup which started X and did X only, but they sort of, when they go in certain direction, has to be logical. It should seem that it was the logical decision that we move from X to Y, but it cannot be X, Y, Z. Like in 2 years, your business has changed so much. And there have been enough startups, we will sort of read about it, whose models have changed. They started from maybe a food tech space, they started, then become a hyper local company, then they got into grocery space. So they have literally been all over the place. So that kind of companies obviously will not do well compared to somebody who may have started, like for example, again I can go to Oyo Rooms as a model. They started in the hotel space, they were in within that space. Within that, they have created various product offerings and service offerings, but finally they were within that same business offering, and their customer target customers also is similar. It did not suddenly day one, at least they did not started offering the luxury segment, right? They may have done it after raising like billions of dollar capital, but not before that. So that's what sort of I think consistency would mean in terms of your vision and your thought process and what you're finally out there in terms of execution.
Correct. I absolutely agree to that, Angurji, because you really can't invest money on someone who is shopping around, because as an investor you have limited control, and you're not there 24/7. You expect the entrepreneur to be there 24/7, and if he's still shopping around or hopping around, chances are very high that you lose your money. So yes, I absolutely agree to what you're saying. So with that, we come to the end of our program. This has been very exciting 90 minutes, a lot of learning. Thank you very much, everyone. Thank you, Francis. Thank you, Patrick. Thank you, Hayden. Ankurji, Hiteshji. Thank you
Thank
all
you.
very much for being here as a part of CASI Knowledge Series. And I look forward to making the introduction shortly. We should all keep in touch. Yeah.
Thanks a
Thank
lot.
you very much, all of you. Thank you.
Thanks
Thank
for